This week on the Nigerian capital markets, MTN Nigeria dropped 707 billion naira half-year profit and declared 26 naira interim dividend. And Nigerians spent about 1.7 trillion naira on data alone. That's with MTN, and about 800 billion on voice. As well, we have HBM, formerly known as Lafarge, also rolling out about 16 naira dividend per share. The NGX Group that hosts the NGS posted record numbers as well. So whilst companies are dropping some of the strongest earnings we've seen on the NGX, the NGS lost about 1.6 trillion naira in just 2 trading sessions this week. So the big question is the market pullback a warning that prices have run too far or presenting some buying opportunity? So today we'll break down what the market is really saying, the results that matter, what to watch in the coming weeks, and how investors should position, especially this earnings season. So let's get into it. But not before welcoming my guest. So joining me today is one of Nigeria's leading market analysts, Andrew Esene, someone whose insights on the NGS corporate earnings investor strategy are closely followed across the capital market. Andrew, it's a delight to have you again here on The Edge.
Thanks for having me again, Dr. Kafo.
All right, welcome. So everyone, this is the place to be. Every week we break down the financial markets. We separate signals from noise and help you to make sense of where opportunities and risk are emerging and help you make smarter investment decisions. So you want to be with us here every weekend. If you are new to this channel, please like this video, subscribe to the channel, and hit the notification bell so that you can always be notified when new episodes are uploaded. So, Andrew, let's get into it. So the markets just lost roughly about 1.6 trillion in 2 trading sessions after the strong rally we've seen this year and the correction and back to the July upswing that we've started seeing. So do you see this as a classic profit taking and sell news behavior, or is it a warning that the valuations are becoming too stretched?
Okay, thank you, Doctor. I like your use of the word classic because it is it shows that this is the normal pattern of the market,
Yeah.
right? So after the significant rally, it is expected that there will be a pullback from profit taking, and that has been the major driver to what we saw in the last week, where the market lost about 0.84%, which resulted in the 1.6 trillion naira drop in the market cap that you mentioned. So I think the dominant driver is profit taking, as is expected after the rally that we've witnessed in recent times. At the high of the market was up about 67%. We are still up today, about 58% thereabout, 57%, 58% thereabout. So it's expected that there will be a breather after the market rally, and profit taking is definitely the dominant driver to what we saw in the market last week.
Yeah, should investors interpret this as some healthy digestion after that strong rally, or are you saying there's something to be worried about or a beginning of a more cautious phase, especially in the second half of the year?
I don't think there's anything to be worried about. Like you said, it's a healthy correction as is expected, but it's also typical of the quarter three performance in the market. So after half year, well, as we go into Q3, we expect the release of half year numbers and interim dividends. And after that, really nothing happens in the market. We're going to the summer break, and then until the early parts of Q4 before we start seeing Q3 numbers coming. So nothing typically happens, and it's not traditional to our own market. It happens markets across the globe. That Q3, there's usually a lull in trading activity around Q3, and that will also show in the performance of the market generally. So it's really just profit taking and the normal market cycle.
So,
We
yeah, go ahead, please.
Investors that did position ahead of the release of half-year numbers, as those numbers come in, they make the decision whether or not to exit those positions, or hold on to take the dividend. So it's really even if we go back, since 1998, that has been the classic trend of the market. So that's what is expected.
All right, so nothing major, nothing untoward, you would say, happening on the NGX. So it's something that is usual this time of the year. But Andrew, what do you make of First HoldCo? You've seen that movement from about 54 naira per share now, closing, I think, around 129 naira. What do you make of First HoldCo? It's moved significantly on, I think, on Thursday, gained about 200, I mean, added about 200 billion naira to its market cap, and then another 9% up on Friday. So what does that tell you about the market liquidity, institutional position? Are investors maybe exiting other stocks and then joining to the First HoldCo rally? Or what do you make of it as a company?
Okay. It's public knowledge that one of the core investors has increased his position to about 25.9%, owning more than a quarter of the bank. And so that positioning, there was a disclosure on the NGX that over 200 billion naira worth of that particular stock was purchased, acquired by the said investor to increase his position in the bank. And this has happened over time, and that is what has also fed the rally. Other investors would jump on that bandwagon to take advantage of it. And so we see the over 100% that particular stock has returned. So while there is, on a year-to-date basis, we did see some positioning, in selected stocks in the banking space. The key
Yeah.
driver for First HoldCo is largely because of the increased stake of the core investor.
So what do you make of? Do you think it's overvalued now, or
Well,
does it still present
yeah,
some upsides?
um, it's it it's along with the acquisition that we've seen, the company did come out to say that going forward,
Yeah.
they were looking to increase their dividend payout ratio up to 60%. Up to 60% of profits will be paid out as dividend to investors, which is good. If that happens, that bank might just be the highest dividend paying bank in among the FUGAs. So it's good news. In terms of its valuation, I think what we have seen really has the price has run ahead of its valuation, but we need
Yeah,
to
so it seems.
review its fundamentals to see where the valuation currently sits. But from our last updated numbers, the price is currently above what we would consider its fair value.
Okay, I mean, it continues to pile those upside. I saw about 9% on Friday. So let's see how it trades in this coming week. Now, Andrew, one of the major telco companies, the MTN, released that blockbuster results during the week. So they dropped the H1 numbers, which showed about 707 billion naira profit after tax. That's up 70% if you compare the value last year. And data value alone, which is the amount of data Nigerians consume, hits about 1.7 trillion naira. And they are also now declaring about 26 naira interim dividend, which I think the qualification date should be somewhere, I think August 20, and probably the payment will be in September. So beyond the headline numbers, what stand out most to you in the details, the data usage, the margins, the free cash flow, or just the fintech economy or the fintech recovery as a whole for this company?
All the points you have highlighted stood out in the MTN numbers. You know, the growth in their revenue to 2.99 trillion, the
Yeah.
growth in data revenue to 1.7 trillion. You know, as you mentioned, and also the bottom line of 711.8 billion. Add to that the interim dividend of 26 naira per share, which actually showed about a 70% payout ratio from the interim EPS of 33 naira, and also a 420% rise from the interim dividend of 5 naira of the same period of last year to 26 naira. So it really shows the it's full recovery from where we were about a year ago, where we saw exchange losses, foreign exchange losses, the impact that had on their books, which almost wiped out the shareholders' funds. So we're seeing a full recovery from that, and then the growth in data revenue is really has really become the new gold mine for the entire telecom space. So
Yeah.
it's very it's a even but this was even anticipated
Okay.
because a lot of consensus analyst recommendations around the particular stock were always overweight. So this result was expected. What I did not expect was the quantum of interim dividend that is being paid out. But as to the numbers, the headline numbers were expected.
Yeah, I think the stock closed around the 850 naira. I'm not sure. Where do you
Yeah, there.
see is that correct? Where do you see the stock going forward?
Well, our fair value estimate is still around 1,100 thereabout. So
About
the
15%
current lull
upside.
in the market, yeah, the current lull in the market, is affecting is broad based. So
Okay.
um, most market watchers were expecting that the stock would go on full beat given the interim dividend, but that did not materialize in the market. Maybe we're seeing some positioning, but at capped prices because of where the general market is. So you want to get into the stock to benefit from the interim dividend and further upside as more quarterly returns come into the market. But you also want to cap that entry to make sure you don't the yield still makes sense. In absolute terms, 26 naira is high, but when you lay it over the stock price, the yield is not that much. But in absolute terms, it is quite attractive.
Okay, let's look a bit into those numbers. So it appears we said Nigerians spent about 1.7 trillion on the MTN data in just 6 months, while household pressures remain real. Does this reinforce data as a defensive growth engine, or does it raise questions about how sustainable the spending is, especially if inflation or disposable incomes shift?
I think it's absolutely sustainable. In some parts of the world, we internet access, is the discussion around internet access is even, around making it a human right, that every human should have
Internet access.
internet access. So
Yeah.
it's no longer just discretionary spending. It's almost becoming it's
Some form of
connectivity.
fundamental
It runs
rights.
businesses, education, financial services, entertainment, social interactions. It has permeated into into our lives, and so it's almost becoming a need for individuals. So I think the growth in data revenue is sustainable, and also they grew their subscribers to 92 million. So we are nearing almost 100 million subscribers. So that will continue to grow, which will also feed into the data revenue numbers for them. So I think it's absolutely sustainable.
Yeah, that's true. Those numbers continue to increase. The number of subscribers, I think it went up by about 8.9% during that period. So, I mean, we've seen management has layered another, solid interim dividend on top of what we saw on that 2025 dividend payout. So my question, or what I'm thinking about is, does this 26 naira dividend signal some genuine confidence in the second half runway, or should investors watch maybe energy costs, regulatory moves, or maybe some competition closely more in the coming weeks? What does this signal to you in terms of how the company is coming out with this 26 naira dividend?
I think it signals confidence, in the management of the company and what their future plans are. If it's not something that will be sustainable, they would not recommend that volume of their earnings to be paid out as dividends. I think it signals confidence. And then if we extrapolate from where they are currently at 33 naira per share for half year, if we say that their full year numbers will be 70 naira, then this is less than 50% of what they have paid out. So we still expect that, still solid numbers up until full year 2026, and then an equally good final dividend from them. For the stock itself, investors will do well to pay attention to energy costs and how those will feed into the operating expenses, and also reduce their profit margins if it continues that way, if the elevated energy costs that we currently have continue. So it's something you want to pay attention to. But the revenue of the telco giant is still very solid, and going forward, really, it won't just be just the growth in their revenue, but how they manage their OPEX going forward, that they'll really be able to deliver value to shareholders. So while we keep our eyes on that, but it's still a solid position to hold for the medium to long term.
Do you anticipate any regulatory risk for the company?
Well, someone said regulators in Nigeria are like law enforcers, right? So
Yeah.
you really cannot say what the regulators will do or what they will not do. But from the last episode, let me call it that they had with the regulators, they did bring in a lot of heavyweights into their board to be able to manage the regulatory risks. The former chairperson of the FIRS, former chairperson of the NCC, Nigerian Communications Commission, I think is their chairman currently. So a lot has been done in that aspect to ensure that that risk is curtailed. So I think with all of that, we should be able to cushion the risk of regulatory intervention in the business. So I don't see it being a major issue. Even if it comes up, it would be settled before it becomes a major issue for the company.
Yeah, and I agree with you. I think their chairman has always insisted that MTN is a fully fledged Nigerian company. So
Yeah.
that risk, obviously, if it does come, it's something that they will be able to handle. So, Andrew, let's switch gears a bit and look at the market in broader terms now. So, HBM, now formerly Lafarge, also reported strong H1 figures. And this week, revenue came up, I think about 31%. Their profit also up by 75% to about 208 billion naira. And we're seeing them come forward as well with that hefty 16 naira interim dividend. I think qualification date is middle of August. So how does the cement story compare with MTN's dividend in terms of the quality of earnings now and what it tells us about the industrial demands?
Well, both so Nigeria is still a green economy,
Yeah.
and as such, it favors the infrastructure capex is still very high, and such players in the cement space will benefit, going forward because of the infrastructure spend. As MTN is well positioned in the telecom space, we're also seeing, the build out of telecom infrastructure, across the telecom space, and we're seeing the same thing in the infrastructure space. So they are both well positioned, as key players in the sectors to benefit from what is happening in both sectors. HBM, former Lafarge HoldCo, was recently acquired,
Mm-hmm. That's
by
a
the
Chinese
Chinese.
firm. Mm-hmm.
Yes, so it was expected, that the company will be integrated into Chinese operations in the country, and as such, we expected volumes to rise. And we did see volume growth as well as pricing, which fed into their numbers and delivered the bottom line and the dividend per share that we saw. Although the dividend was higher than the EPS for the period, but retained earnings were brought in to make that payment to investors. So both companies are well positioned in the sectors that they play. And if you watch analyst recommendations over the
Yeah.
last 6 months, you see that they featured prominently on those recommendations for investors.
But why is that necessary though if the earnings per share is lower than the amount they are declaring? Why was the need to go into the retained earnings?
It's a board decision, that
I mean, I was just thinking,
the reason for that
was there any
decision.
major
Yeah,
reason for that?
and just to maybe to reward the investors over time. Retained earnings, it forms part of your shareholders' equity.
Yeah,
Belongs to
I
the owners of
understand
the
that.
company. Yeah. So why they had to do that is maybe further inquiry into that decision would unearth the reason, but the board was well within their rights to do that.
Yeah, okay. So again, the NGX Group, the company that hosts the NGS itself,
Mhm.
posted record H1 numbers. I think their revenue uh, more than doubled to about 17.6 billion. Profit after
Yeah.
tax rose to about 170%. And they're also now declaring 1 naira 30 kobo per share as interim dividend. As the exchange operator, is this the purest proxy for how busy and profitable the capital market has been in 2026?
I like the phrase you used, the purest proxy. NGX Group was a no-brainer.
Yeah.
It was a no-brainer. They hold the infrastructure of the market, and with the extension to um, the trading time of the market, the additional 1 hour
Mhm.
and 30 minutes that
That would
was
definitely increase the number of transactions, right?
exactly. So it was the numbers we expected. Not that the particular numbers we expected, but that we expected the growth in revenue and to their bottom line. So, like you said, it is the proxy to benefit from what is happening on the stock exchange. You have the NGX Group to position in, and one of the key financial institutions also revealed a 5% stake in that platform recently. So it was expected. It's the platform for trading. Increased trade results into increased profits, increased revenue for the company. So that was expected to happen. So, and they also, I think why the price has even stalled is because they did a 1-for-3 bonus, which was credited within the week. And so
Okay.
some investors decided to, sell down that position. Outside of that, we expected the price to consolidate at current levels. And then we are still going to see the listing of the Dangote refinery. So in terms of increased listing fees and
Yeah, that's expected
fees
as well.
from
That's still going to
trading
come in.
volumes, exactly. So the horizon is just um, positive for the fortunes of the business.
And so you said one of the financial institutions already have about 5% stake on the NGS. Is that correct?
Yes,
Do we know
they
their
revealed that they have 5%. That's I think United Capital
United
released
Capital?
that information. Even before now, I think the VFD Group also has significant stake in the NGX Group.
Yeah, I agree with you. It's no brainer because with the amount of transactions now taking place on the NGX,
Yeah.
we expect those numbers to continue to rise. Okay, we've also seen solid improvements from some names like Nestle, Nestle Nigeria. Their revenue also went up by about 650 billion naira. Profit after tax also up by, I think, about 28%. And we're seeing early indications on Dangsem, FCMB, United Capital, and others. So, looking across the telecom, cement, the exchange, and some consumer good is the earnings season so far confirming that broad-based strength for, or still some concentrated on maybe some few large caps that we've seen.
Yeah, the large caps will benefit more because of their reach and then their ability to um, because the economies of scale, they can beat down the average cost of delivering their products to the client. So although we see the gains in the market are broad based, so like you've mentioned, looked at telecoms, the telecom space, banking, financial services, infrastructure, the cement, and they're releasing very good numbers. And then some selected companies in the consumer goods space that have pricing power have also done well. So the gains have been broad-based, and because we're comparing this half year to what happened in 2025,
Yeah.
where we had some exchange losses, some recoveries, a lot of the sectors, even telecoms, the banks benefited from FX gains, but the consumer goods, the telecom space suffered for it because of their FX loan exposure. A lot of them have paid down those positions. A few of them did rights issues to be able to raise the capital to pay down to exit that exposure. And so we are seeing better numbers from them. So it's broad based for them, and most of the sectors are returning improved numbers compared to the same period of last year because of what they've done to fix that problem. The likes of the breweries, we also saw they raised capital to pay down the FX loans, and then they also went into backward integration just to be able to, remove themselves from depending on imports for their raw materials.
And on the online gas and also, I think we've seen Seplat H1 numbers. We've seen Aradel as well.
Yeah.
But for Aradel, I'm seeing though the revenue, went up significantly to I think about 1.7 trillion thereabout. But there are some concerns about their financial cost as well. So as you can see, rates are still up. I'm talking about interest rates. The NPR is still about 26.5%. I imagine that that's also eaten up into some of these companies' bottom line. So we we continue to watch that space as well, because in as much as they are delivering some of these, the top lines are heavy, but a lot of
Yeah,
it is also eaten down into those bottom line.
yeah, yeah.
Okay. So we are still expecting heavyweights like as Zenith Bank, Access Bank, Nigerian breweries,
Mm.
Unilever to deliver us, release their earnings probably this week, this coming week. What are the numbers? What are the key numbers that you'll be looking forward to, or you'll be watching from these companies? So you'll be watching to see if they are going to be telling us about their interim dividends, or just watching the profit after tax figures.
Yeah, it's sector specific. Like you said, for the banks, you want to look at their net interest margins,
Mhm.
their cost to income ratios. The dividends are expected, except for the banks, the expectation is a bit tempered because they have to go through regulatory approvals for whatever dividends they want to pay to investors. So we are watching to see what the final dividends will be. But
Yeah.
for the long term, it's really the quality of their earnings, that is really that really come on that spotlight. And then they just raised capital. We just came out of the recapitalization season, so they have a lot of ammunition to deploy when it comes to their investing and lending activities. So we're watching the numbers. We expect them to be good. And then in terms of dividends, um, after regulatory approval, we expect to see what those will be. But this is also interim dividends. Interim dividends in the banking space are not what final dividends, will be. There may be surprises, as GT pulled
Mhm.
last year. So, but at the end of the day, it's really the full year dividend, is the final dividend that investors want to track in terms of what will push capital appreciation, what will push the price, to record trading gains for them. So for the banks who want to look at the quality of their earnings, the bottom line, the loan to deposit ratio, where they are pushing their funds to, whether they are facing the investment space because of the elevated rates in the market, or whether they are pushing funds into lending, to be able to meet up with the loan to deposit ratio requirement of the central bank. So we'll watch those key numbers.
Do you have any updates about Access Bank, their regulatory issues, and how far they going about I think the divestment of some of their foreign subsidiaries, as
Yeah, after
discussed
the
last week?
divestment, okay, not much from them after the divestment, but we did see news about the bank um, addressing a rumor concerning them shutting down. That was unfounded, and they've come out to debunk that rumor. But with
So, sorry, what do you
Zenith,
mean by they shutting down? They shutting down
yeah, I think
subsidiaries,
it
or
was just
the bank as a whole?
it's just some people being mischievous.
Okay.
But he just had to come out to address it. Zenith informed the investing public that the board had met and
Mhm.
recommended an interim dividend, and after regulatory approval, that would be released to the market. So we expect the rest of them to toe the same line, and then typically before the end of September, we would see the numbers come out, and then the interim dividend, and also the delay in the release of these numbers also, feeds into the lull that we expect in the market, because typically for the banks, because of that regulatory approval that is needed, it delays the release of their numbers, and investors just have to watch and see what those numbers and the benefits that will be in those results.
So, I mean, just still staying on Access Bank, is it safe to say if they are yet to clear that regulatory bottleneck, we should not expect any interim dividend for the half year?
Well, I expect Access Bank to reward investors for the half year. It's currently selling far below its peers, and
Yeah.
because of the
One of the top financial companies in terms of asset base.
exactly. So, and I think the expansion that we've seen, across Africa has been the focus, right? And now because of regulation, which has clipped the amount of investment in foreign subsidiaries, I expect that the bank would, now look inwards and try to and harness the synergy from all this expansion that we've seen, and then consolidate all of that into delivering value to its shareholders. So going forward, I expect that we would see improved numbers, higher rewards, dividend rewards to investors, and then also a price appreciation. But it really depends on what they do, the body language of the bank, and then what they actually declare going forward. There's a lot of value locked in that really needs to be released in that bank. It's not trading where its peers are. The return on assets is very low, and they need to you know focus on harnessing the assets that they have
Yeah, at least
acquired.
bringing to bear the synergies from all those various acquisitions across the continent.
Yeah, yeah.
Okay, let's look at some of the dividends and the qualification date. We talked about MTN's qualification date to be mid to late August. I think is it August 20th or thereabout.
Yeah.
HBM Lafarge is I think 12th of August. So if investors are interested in those stocks, they can always if they want to earn it, they should be looking at investing prior to the qualification date. So, how do you expect the market to trade over the next 2 to 3 weeks? Is it some dividend capture flows as small banks or more of these institutions come up with their earnings, announce interim dividends, or you expect some continued rotation or a profit taken?
Okay. But like you mentioned, the dividend play is a key theme within this period. Investors will weigh what the capital appreciation has been on their positions and what the dividend reward is, and decide whether or not to sell to the release of the results, or whether to hold and take the dividend. The expectation going forward, and the release of the dividend and the closure date, for those dividend will also mean the markdown of those particular prices, to account for the dividend that has been declared, which will force prices lower. So I think the current position in the market that we are seeing, a mild drag in the market, I think that will continue. Investors who want to hold to take their dividends will do so. Those who want to exit because of the appreciation already recorded will do so. And as we go closer, to the as we get updates about the Dangote refinery, we got information within the week that the application has been filed with the SEC.
Okay.
And so the expectation is that as we go closer to the open of the IPO, we would see increased sale pressure in the broad market itself, because investors will want to release liquidity to be able to participate in the Dangote refinery. Information about the private placement was released within the week. Successfully raised 2.5 billion. But the offer was 3.7 times subscribed. So
Wow.
a lot of that liquidity will come into the IPO, to make those to invest in the IPO. So we expect that we will see increased sell pressure in the general market itself to release funds for the IPO. So going down, as you've said, the dividend capture strategy, some technical profit taking, and then the outlook for investors trying to make funds available for the IPO. I think that will be the dominant theme for the next few weeks.
Okay, so Andrew, what's the calendar like for the IPO? When exactly is this IPO going to be open to the general public? Do you
So
have
the
that
expectation is that
information?
it will open in September. The exact date, is not known. That will be communicated by
Okay.
the lead advisors once they get it from the regulators.
And we don't know what the price will look like.
No, not yet.
Can we
Investors are
extrapolate from
pricing,
the
yeah, from
can
the
we
private placement.
extrapolate
Private
from
placement was
the
around
private
was around
placement?
480 naira. So we're expecting something above, or either the exact price or something above it.
I think generally it used to be private placements are usually lower to the IPO price, maybe about 20%. That's like the general market pricing strategy. I think the private placement was about 35 cents. I'm not sure. I think somewhere around
Yes,
there, about 35
yes,
cents. And then they raised 2.5 billion. Now, one other thing
yes.
that's a bit unclear is what is the size that they intend to
About
raise?
about $1.5 billion.
So the IPO is they're supposed to raise about 1.5 billion from the IPO. So essentially
Yes,
they're looking at raising 10%
yes, of the $40
of the
billion
40
valuation.
billion
Yes,
dollar valuation.
yes. Mm.
And so
So
I
in
think they're
terms of the
looking to,
pricing,
yeah, I'm just trying to, trying to gauge. So I think that might
where
lead
the
them to
pricing
raising
process
about 10 billion shares. Is that correct?
10 billion. Well, 10% of the the capitalization is known, the amount they want to raise is known, but the pricing, the number of shares will depend on the pricing, right?
Yeah, that's what
Because
I'm
the
looking
pricing
at.
is not certain. Yeah.
If you look
So
at the amount that have been raised, $2.5 billion and 35 cents, all right? So that can give us an indication of the number of shares raised. So they're looking to raise another 1.5. I'm looking at the whole shares, you know, rounded up to
okay,
somewhere around 10
in,
billion.
in total.
Yeah.
Okay, okay.
Okay. I mean, we'll continue to watch that, and I'll be providing more information as we know it. Okay.
Yeah.
All right. Andrew, let's look outside the Nigerian economy for a bit. So globally, all markets, the oil prices have continued to rise, and we saw it retrace a bit, and then it's going back up. It remains very volatile, and we've seen some new U.S. tariffs on select Nigerian goods. So does any of that change the near-term risk picture for the NGS or for companies that just reported those strong numbers, especially the oil, which is almost a proxy for energy costs for these
Mhm.
companies on the NGX?
Well, the global risks, as they stand, whether it's you're looking at interest rate movements or oil price volatility or the trade policy uncertainty arising from Trump tariffs, so to say. They are key risks that we are watching, but in terms of its impact on the Nigerian market, I would say it's really the oil price volatility, like as you have mentioned, which feeds directly into the oil and gas space. That is the um, that is the key risk. That is one that would, impact our markets, and not just even our markets, but government revenues. If anything um, happens in that space, that uncertainty will directly feed into the oil and gas space, and then government revenue. So, and what happens in the oil and gas space will also, you know, trickle down to the market itself. Maybe not as impactful as, say, maybe if it was something affecting the banking sector,
Mm-hmm.
which has highest liquidity and capitalization currently. But in terms of that risk, they are things that we are watching, but the impact in our market is largely, contained within the oil and gas space, and then government revenues. Government revenues can then filter into other sectors of the economy.
Okay. I think we've not discussed since the last time the MPC had their meeting. So MPC maintained interest rate at 26.5%. That's the anchor rate. Also this week, Fed left interest rates unchanged. What does this tell us about the direction of interest rates for the rest of the year? And also forget, I think the Bank of England also changing their expectation of interest rate. Initially, they were a bit hawkish in terms of interest rate movement, but it appears that that is cooling off now as they get a better understanding, especially about the driver of the current push for, current inflation push, which is majorly the energy
Energy.
cost, and which is obviously what is happening in the Middle East. So what's your expectation of interest rates for the rest of the year? Do you anticipate it coming down, or it's going to be at this level for the rest of the year?
Well, it really depends on what happens between the US and Iran and the impact on energy costs, because before now we were on an easing cycle, right? We're expecting the drop
Yes.
in the CBN did cut rates from 27 to 26.5%. So that was the expectation because inflationary pressures were coming down. But with the pressure on energy and how that feeds into, consumer spending, production costs, inflationary pressures around all of that. That is why rates are still where they are. And even for some economies like the US, um, the anticipation is that there will be increase in rates because of the direct impact on energy costs. But I think that most authorities are watching to see if they can hold rates steady at this level, to see if we can get the escalation of the tensions
Yeah.
in the Middle East, so that they can continue the easing, the drop in the rates, which was what was happening before now. So I just think it all depends on what happens to energy price levels.
Okay, I think once we have an understanding that this is not actually some form of demand, push inflation, it's something really external to most economies. It's not something that you really have a control over. The better the monetary policy authorities will be able to target inflation. Nigeria's inflation dropped slightly to about 15.91 for June. We'll wait to see what happens in July. So, Andrew,
Mm.
as we begin to coast home, for listeners, for our viewers who currently hold or are looking at MTN, Lafarge, that's HBM Lafarge, the NGX Group, or the banks still to release the reports, what's the single most important thing they need to be watching out for?
Um, it's always the value, right? And it's not to position in these stocks for quick wins. It's always um, taking a medium to long term outlook, to the market, and then always go for value at bargain prices, right? So the names mentioned are quality names: MTN, NGX Group, Lafarge, selected consumer names. So it is always um, confirming that that value is still there, and then getting in at price that is, that is attractive, getting in at attractive price levels and holding for the medium to long term, because whatever justification or whatever upsides that we see will be realized over time. It is not something that is short-lived. MTN is growing its subscriber base.
Mhm.
They are returning more of the bottom line to investors. HBM, we talked about the capex spend, and the impact of the Chinese acquisition and what that has done to their books, what we expect it to continue to do. We talked about NGX Group owning the trading infrastructure and then other market events that would still be in their favor going forward. So all of this will materialize over the medium to long term. The principles remain the same. The market rewards the patient investor, getting at attractive prices and then hold those positions, and even better if the market drops unexpectedly, like we're expecting the Dangote IPO, we're saying that it will have some sell pressure in the market, then buying a good name at a low price is actually a good, it's a good strategy to adopt. So just make sure you're in quality names, and over time, they will do well.
Are there like some stocks that you see that are currently trading at a discount now, dividend or no dividend, interim dividend or no interim dividend, that maybe investors should be watching, especially this quarter? I know you said that we might still see some sell pressure, and so they can keep an eye on some of those names.
And so it's still the usual suspects. We've seen like the year-to-date gain of 58%. We did see prices rally. So a lot of the tickers that we watch have that rally has taken them very close to their fair value estimate, and some of them even selling above that, as we mentioned with one of the banks.
Yeah.
So a lot of them are not at bargain entry level, but as we continue to watch them and we see price drop, it will unearth those values that value, and investors can position in them. Just continue to watch the key names. It's just that currently prices have gone high, and we expect a moderation in those prices. That would be the best time to position in them.
Okay. I mean, especially as some investors rotate into, sell to make funds available for the Dangote refinery. It will definitely provide some buying opportunities for some of these other names and then bring their valuations to more attractive levels. Okay. So finally, Andrew, if you had to give investors one kind of like practical rule for this earnings season, what would it be? Would it be just follow the numbers, respect valuation, take the dividends, or manage the risk first?
So it's all of those. It's all of the above. Watch the numbers, watch the quality of the numbers that are being released. What are the drivers? It's good that the revenue grew, but why did it grow? What is the driver of that growth?
Are
What are the
sustainable.
as it triples down, exactly as it trickles down to the bottom line. What are the hurdles? What's the finance cost? How does it trickle down into that? And even as you watch that, and we've seen really that the numbers released because of the situation of the market at this time did not really drive prices, right? But for some selected stocks, we saw Eternal Oil. They released good numbers, and the stock went on full bid the next day. MTN released good numbers, good dividend, but it didn't reflect in its price. So investors are being
Yeah, I didn't
selective
see
because
any
a lot of
movement on Friday when I was watching. When that result came, I was watching to see what happens on the stock.
the
It
expectation
was
was that it
muted.
will go at
Yeah.
full bid, but
Mhm.
it could also be that investors were already positioned. So
Okay.
that the good result was expected, maybe not the dividend, but they were already positioned and waiting for it. So they are not just, so it's buy the rumor and sell the news, right? Maybe they were waiting for others to come in, and then they would exit on them, especially given that the markdown date is around, it's still 2 to 3 weeks away. So they could sell and then buy back to position for the dividend and stay longer. So it is watch the numbers, respect valuations, and then I would say take the dividends, average down if you see a
Opportunity.
bargain positioning opportunity, and then hold for the medium to long term. Even with the listing of the Dangote refinery, we still expect the Santa Claus rally to happen. Maybe it will be muted, with not as much momentum as is normal for the season, but that will still happen. And we'll look back from Q1 of next year to this current time, and we'll say, oh, these prices were good
Way
entry
cheaper.
levels. Yeah.
Yeah, I think
Yeah.
I agree with you. And we have a lot of potential drivers. After the election, I imagine that the market would also be moving in an upward trajectory. So, as you mentioned, these numbers by Q1 next year, maybe looking at it and say, hey, why didn't I lock in at these numbers?
Yeah.
Yeah. All right, Andrew. Thank you so much. That's all we have to offer today. It's always a delight listening to you, Andrew. Thank you for coming to provide the insightful analysis as you always do.
Thank you very much. Thank you.
Yeah, thank you so much. And everyone, thank you for joining us today. If you like this episode, if you like the videos, please like this video on your way out and subscribe to the channel and hit the notification bell. Please share this video with your communities. And we're always here every weekend to help you make smarter investment decisions. Take care, and we'll see you again next week. Bye.